Hello and welcome everybody to the Gold and Silver Club end of week review, non-farm payroll special today, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So during this live session we will cover an end of week summary for gold, silver, oil and commodity currencies. We will look at the top trades of the week. We'll be covering live market commentary and technical analysis and looking at the week ahead. So key events looking forward and of course answering any of your questions today. So the gold price this week has seen more volatility, and what I'll do, I'm going to talk you through very shortly our top trades of the week and what to watch out for in the week ahead, and certainly today ahead of non-farm payroll. So a little bit about what to expect. So traders are awaiting US non-farm payrolls data released for May. The gold prices were up just yesterday 2.3% from a low of 1,391, hitting a high of $1,423 an ounce just yesterday on the back of ECB President Draghi's speech and US jobs data. So what did the ECB say? Well, the ECB decided to maintain the refinancing rate at a record low of 0.5% yesterday, whilst ECB President Mario Draghi reiterated that the bank's easy monetary policy should continue to support prospects for an economic recovery later in the year, and it would remain accommodative for as long as necessary. So that news pushed the euro up to a one-month high, and the US dollar experienced broad selling, which we'll show you very shortly, which boosted the appeal for gold. So we saw a nice spike on gold, pound dollar, and also oil as well. US jobs data awaited. So due to the correlation between the unemployment rate and QE, gold prices are currently directly linked with what happens to US jobs market, as I'm sure a lot of you know. The US non-farm payroll report for May will offer clues to how long the US central bank intends to operate its $85 billion a month asset purchasing program. And US employers are forecast to have added 163,000 jobs to their payrolls last month, slightly down from April's 165,000 count, while the unemployment rate is expected to remain steady at 7.5%. So yesterday the official data showed that the number of first-time applicants for US unemployment benefits hit 346,000 in the week ending June the 1st, posting an 11,000 drop in comparison with the previous week's revised figures of 357,000. So looking ahead, the big question really now is how will today's non-farm payroll data impact gold and silver prices? So we're going to look at that very shortly. So just before we do so, a little bit about myself and Nick at the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil and forex. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on this call is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. It's through his first-hand relationship with some of the world's most successful traders he discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy. He also regularly writes for a number of global business and financial publications, and we both appeared regularly on financial television. This is us just recently on Swiss financial television, giving our views on the gold and silver markets. And here's some recent global press that the Gold and Silver Club has been in. Okay, so you're in safe hands today, and let's quickly have a look, and we're going to just have a look at what the gold price is currently. So $1,411 an ounce. So we've come down a little bit since we spiked up to 1,400 and 23 just yesterday, but we'll have a look very shortly at the live market to see what setups there are and what is happening just pre-non-farm payroll. The top trades of the week. So using the Gold and Silver Club signature trading strategies, the top trades of the last week, we've had several trades opportunities just over the last couple of days. So we had a really nice trade just yesterday, in fact, on gold. So this was, the price actually came down to a lower trend level. You can see that we've got an upward trending trend line there where you've got higher lows and higher highs. We've been in this in gold for this consolidation zone for about 2 weeks now, and the price came down 1398 level, which was a supportive area. We had a nice opportunity to get in there from, you see the price bounce quite strongly from there, produced a nice hammer setup, 70-point risk, and we just rallied all the way up to our take profit level, which was $1,419 an ounce. Very straightforward trade, 70-point risk on that, so each lot traded was $700 risk, and the reward on there was 210 points, so $2,100 US of profit there just from a very quick day trade. So nice 3-to-1 risk to reward on gold just yesterday. Crude oil following that 101.85 level, really nice at the moment, providing good support. We came down. It's provided actually over 3 trading opportunities now, really in the last 10 days or so. You can see where we came down just yesterday. Actually, this was just a little bit earlier on during the week. We came down. We did break through the 100 and break through the 101.85 level. Then we came up, and then that started to be supported again, provided a nice opportunity to go long. And you can see that we just traded it back up to its resistance, the key price action level at 103.69. So nice 184 point trade on crude oil. Again, crude oil, it tends to give you those pips very quickly, so you tend to be in and out within 24 to 36 hours. Quite often there's a lot of nice day trade opportunities on crude oil at the moment. So that was a risk of 65 pips, and we came out 184 pips there. So $640 risk on there to make $1,840 profit on each lot we traded for a nice 3-to-1. And some of you may have caught this yesterday, USD Canadian dollar. We came up to a very key price action level actually earlier on in the week, key level of resistance. We'll have a look at our chart very shortly actually, just show you that. The price sold off, it came down to another price action, key Fibonacci level. The price then gave us a very nice price action setup, as you can see on the chart there. Got a very nice inverse hammer, and the price then broke through a level of support and came down short and sharp just yesterday. So entry point there 103.25, and we came out at 102.19. So nice and quick day trade again, nice 106 pips on that. So 41 pip risk in order to take the trade, $410 US risk per lot for a reward of 106 pips, or 1,060 US of profit for each lot traded for a very quick 2-to-1. Really nice setup there. The overall momentum. The US dollar had also sold off first, so this indicated that we were going to get some weakness in USD CAD. We started to see gold gain some strength. So as a lot of you know, USD CAD is inversely correlated majority of the time to gold, so this was a really nice setup based on correlations as well. Okay, so with that, what we do, guys, we're going to turn it over and we're going to have a look at some live technical analysis. Now, if you've got any questions, do just post those in the chat function. We just get set up now. So what we'll do, just going to get the screen sharing up. Okay, so first market we are going to take a look at is the silver market. So silver really starting to coil up now. It's been in a very tight range since more or less the 21st of May. We've been moving really between the 22 level, or 21, yeah, is approximately the 22 level, up to the 23 level. So really there's only a range at the moment of circa about 100 points on silver currently. So we are expecting at some point we are going to get a breakout. It may be today on non-farm payroll. So what I would be paying a lot of attention to, obviously the market is moving very tightly within this range, finding support around just above 22 to there and finding resistance at 23. So a breakout on either side now could mean that we have a substantial move to the upside, or we could get a move obviously back down here, back to test the 21 level, and possibly if it was follows through substantially, we could get the price come all the way back and retest the lows of the 17th of May there, all the way back down to 20. So at the moment, I would just be very prepared with silver for a breakout in either direction. Currently, we are starting to see the MAs there are starting to indicate that we might be about to get a little bit of a level of support. We may get a breakout to the upside, but overall, we are still very much in a downtrend on silver. Gold has already popped up. It did pop up yesterday. We'll talk about that very shortly. So silver, really watching it either way at the moment. So for a breakout below the 22 level or a breakout above the 23 level. So non-farm payroll will definitely give you some indication as to what is going to happen there. So if it does break out, I mean, the next really key price action levels are going to be around 23.70 level, which will possibly provide some resistance there if we do get a breakout. Beyond that, we may be able to see the price get back into the 24 and up to 24.79, which would be the high of 25th of April. But that's not going to happen in one day. That could happen over the course of next week if we do start to get a breakout. Likewise, on the downside, if we get a breakdown in price, I would be looking at certainly the 21 level there, 21.16 thereabouts is a key Fibonacci level, 23.6 retracement, and if we see the price break it down lower than that, we could see the price come all the way back down to test the 20 level. Definitely watch silver today. Gold, as I said, we had a really nice setup on gold yesterday, just around the 13, just come down here, around the 1397 level. We've been supported by a very clear upward trending channel here, which we're in at the moment on gold. You can see we're getting higher lows, higher highs. We do have that key resistance level at 1,424, also at Fibonacci level there as well. You can see going back to the beginning of May where that provided some support. And since then, at the end of May, it's provided resistance. We had resistance again just yesterday. Price spiked up. We saw some profit taking there. So at the moment, we're a bit in limbo there. We're at $1,411 an ounce. So we are going to be awaiting really three potential scenarios here. So let me just take a screenshot to talk you through that. What we'd be interested to see at the moment is whether we are going to see, so we have seen this 1424 level provide resistance. So interested to see now whether the price is just going to start to sell off on that 1424, if it's just going to come back down, come and test the 1400 level, come and test the lower end of that trend line, and whether from there we may get some additional buying, which brings it back up to the 1424 level, and see if that can be broken through and see if we get a rise back to the 1450 area, which would be the next level of likely resistance if we do get a breakout from that area. Alternatively, what we could see is if the price does continue to come down and we have some positive data out of the US this afternoon, we could see that the price does break through, which will weaken gold, that the price does come down, retest the 1385 level. If that breaks, we could see the price just come down and come all the way down to the 1350 area. If it really does, if the data is very positive for the US, we could see that happen. Looking at the US dollar index at the moment, this is just a screenshot taken from our Reuters platform. You can see the US dollar index right now, it had a huge sell-off back down to 81 level just yesterday. And this, so there's certainly some weakness in the US dollar at the moment. So ahead of today, we'll see what happens in terms of what the non-farm payroll data does to the US dollar index here. But US dollar index certainly looking very weak at the moment. So we may see that we get a nice move to the upside on gold. So if we were to get a nice spike up on gold today, this is what we'd be looking at. So potentially the data, if that was to come out, we could then see 1424 level broken, big spike up in price, and we could see the price just come all the way up to the 1450 and possibly back towards the upper end of this resistance channel around the 1465 level. So those are the three scenarios we're really considering right now. Okay, so we can recap those towards the end, but those are the three scenarios we're looking at on gold at the moment. Crude oil looking really interesting. We've had some really nice trade setups over the last few days, or last 10 days actually, on crude oil. You can see here very clearly, again, moving within this particular trend channel. Okay, so I just show you that. So crude oil here, we've had really the 100 and one level has been providing a nice level of support. But you can see here we've got this downward trending channel, which is being very nicely supported too, which has given us several opportunities to really both go short, go long, short, long, short, long. You get the picture, right? So this, at the moment, actually, we're starting to form again a doji here, signifying indecision in the market. So very interested to see if this is going to follow through and just come back towards the lower end of this trend line again, which is around 103.97 level at the moment. So that offers a very nice risk to reward if we were to sell off at the moment from crude oil. On the daily there, we can see that you can see the recent, we're consolidating, but we are also in a recent downward trending channel there on crude oil. But certainly crude oil, really, once you get a nice trade on crude oil, it moves very quickly in your direction. You can reach your profit targets exceptionally quickly. So if you catch it right on these price action levels, you can certainly capture at least a 2-to-1 on a lot of these trades. So crude oil, I would definitely keep an eye on, see if we get a sell-off today, this afternoon, from this 103.96 level, see if it comes back to the lower end of the trend line. Similar situation really to WTI oil as well. We can see very similar pattern emerging recently since the beginning of May. So over the last month or so, we've been in this downward trending channel, which has provided some nice opportunities to both go long and short. Very clear price action setups there as well. You've got these big capitulations when the price comes down to the lower end of the trend channel. So I would certainly also keep an eye on WTI crude. So you can see there, price is coming back towards the upper end of the resistance channel there. It may be that, depending on the non-farm payroll data, which comes out in a couple of hours, we could get this breakout of this downward trending channel, but otherwise we could see the price just really come back down within the towards the lower end of that trend channel. So I would definitely be also watching WTI crude today. These are both very big movers, so you could catch a nice move. So we'll be looking at those. New Zealand US dollar, I know that it's come down quite significantly. It's really been quite choppy recently, but it's still very much within a downtrend. We look at New Zealand US dollar, obviously, because of the correlation with the commodities there as well. And we're seeing quite a large sell-off there again the last week or so. We've come down to actually test these lows going all the way back to 2012. So we've come down to an area of support. We have found support around the 0.79352 level. So going to be very interested this afternoon to see if we can hold on to that support. Obviously the risk to reward, being the price is so close to support, is quite tight. So it's fairly decent if there was to be a nice recovery here, but I would wait for the correct setup. So, but we are retesting this key level of support. Otherwise, you may see the price break below 0.79125, and we could head lower to the next level of support. Is quite a way down. So I would be looking at this, because we are at an event area at the moment, this level of support, to see whether we're going to get a nice level of support and break back towards the 0.80654 level, or whether we're just going to break support there. So New Zealand US dollar for us, one to watch. USD Canadian dollar, you can see we're actually starting to form a little bit, just very short term, we're starting to form a bit of a downward trending channel there. Let me just draw that for you so you can see that. Okay, if we go out further, just we zoom out a little bit on this chart, you can actually see where we've encountered. So this is the level of resistance going all the way back to June last year. So you can see we came up to that level of resistance around 1.04162, and we couldn't break past it. It did. A lot of traders took profit at that level, and we had some nice price action setups from there. So potentially what we may look for now is support now becoming resistance. So you can see here where we had the this opportunity to sell short. We broke through level of support here, so we came down quite nicely. And now at the moment where USD Canadian dollar is, obviously if the US dollar index continues to sell off, we will see this market come down as well. So we may see now that previous support becomes resistance, and we just look for setups to see if the price does just come back down within this trend. It's starting to form a downward trend. Otherwise, a spike up in price, we'd look to see if the price comes back towards the upper end of this trend channel around 1.0 3065. So again, that's going to be very much dependent on the news which comes out from non-farm payroll this afternoon. But USD CAD one to keep an eye on as well. Australian US dollar, again, we're seeing weakness. We're below all the key moving averages on Australian US dollar. We did get a lift yesterday on Australian US dollar alongside Euro USD and also pound dollar and gold as well, but that was quite short-lived. You can see more weakness today in Australian US dollar. We haven't broken through yesterday's low, which was 0.94313. So whether we start to see a bit of a bottom form here, we'll see. Just want to probably go into the time frames a little bit, the 4-hour time frame, just to see whether we are actually going to get some decent setups there. Indecision in the market at the moment. Obviously, we've got non-farm payroll this afternoon, so I'll be very interested to see if non-farm payroll is going to give some support to Australian US dollar this afternoon, or whether we're going to see yesterday's low retested 0.94313. Okay, so we're just going to go across to some of your questions, guys. You've got a few questions coming through there, which is great. Okay, so going back to gold, I think we've got a few questions on gold. So, okay, so a few different questions coming through there, guys, on gold and some of the commodity currencies there as well. So, first questions there are with regard to shorting gold. So, we're just going to have a look at what we discussed as potential price action that we may get. So, at the moment, we've obviously on gold, we've come towards this 1.424 level, which is that level of previous support and resistance there. So we are seeing some take profit currently at that level. So yeah, I mean, obviously in terms of we can't offer any specific advice to some of you who are in trades who just going over where to put your stop losses and your take profits there. What we're looking at the moment, though, as we discussed, is that where the current price is, that we may see the price come down, retest the 1399 level, the lower end of that trend line. This could be around the non-farm payroll time, and then it could find support there and come back to retest the 1424 level. Or we could see the price break down below that 1399 level, depending on the news, and come down, retest the 1385 level, and we'll be interested to see if that level of support holds or whether we get a breakdown towards the 1350 level. The other option, obviously, if we get a spike to the upside, is that we'll break through the 1424 level, and on that, there's not too much to stop the price getting towards the 1450 level over the course of the day. There's not a lot of resistance between 1424 to 1450, and going back towards next week could go towards the upper end of that resistance channel all the way to around the 1465 to 1470. So those are the three key scenarios we're really keeping a lookout at the moment. Okay, so a few questions just relating to the Australian US dollar pairs. So that is, yeah, I mean, if you go, what you want to have a look at is just take a look at the derivatives. So you've got Australian US dollar. So Australian US dollar, you can see where we've got, we're staying within, we've got a lot of weakness, Australian US dollar. So I'd look across to Australian dollar CAD has recently just broken support yesterday. We had a strong hammer set up yesterday, which you can see it didn't follow through though, and you can see the price today has come down and we've formed a new 2030 low on Australian Canadian dollar. I would also be mindful Australian dollar Japanese yen has also formed a new low just today for 2013. We actually broke through key moving average there. You can see 200 MA there, we've broken through. So I would be careful about trying to pick a bottom on Australian US dollar at the moment. So Australian dollar Japanese yen has broken through. Australian New Zealand dollar is finding some support at the moment. Australian US dollar, I would be watching it carefully, but I am mindful that it's broken support on a couple of other pairs there. Okay. So for the week ahead, today, of course, at 1:30 p.m, we have US non-farm payrolls. So non-farm payroll, of course, you know, measures the change in the number of people employed during the previous month. That excludes the farming industry. So job creation is the foremost indicator of consumer spending, with accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. So it's going to be very important because of the correlation with gold. On Friday at 1:30, we also have the US unemployment rate. So the unemployment rate measures the percentage of the total workforce is employed and actively seeking employment during the previous month. In April, the unemployment rate was 7.5%. In May, the unemployment rate is expected to remain at 7.5%. Next Wednesday at 10 p.m. we have, for those of you who trade the commodity currencies, we have New Zealand dollar interest rate decision. So the Reserve Bank of New Zealand decides where to set the rate. So traders watch interest rate changes very closely, as short-term interest rates are the primary factor in currency valuation. So a higher than expected rate to be taken as bullish for the New Zealand dollar, while a lower than expected rate to be taken as bearish. And of course that's important because of the correlation with gold. Next Thursday at 1:30 p.m. we have US core retail sales. So that measures the change in the total value of sales at the retail level in the US, excluding automobiles. So that's an important indicator of consumer spending, and it's considered as a pace indicator for the US economy. So again, a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And that's important because of the correlation, inverse correlation with gold. Next Thursday at 1:30 p.m. we have the US import price index, and the US import price index measures the change in the price of imported goods and services purchased domestically. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Next Friday at 10 a.m. we have the Euro Core CPI, and that index measures the change in the price of goods and services purchased by consumers, excluding food, energy, alcohol and tobacco. So that data has relatively mild impact because of the overall CPI in the European Central Bank's mandated inflation target. A higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro, and this is important because the euro correlation with gold. And next Friday we also have at 1:30 p.m. we have the CAD manufacturing sales. So manufacturing sales measures the change in the overall value of sales made at the manufacturing level. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD, and this is important because of the CAD correlation to gold and oil prices. Next Friday at 1:30 p.m. we also have the US core PPI, and that index measures the change in the selling price of goods and services sold by producers, excluding food and energy. So PPI measures price change from the perspective of the seller when producers pay more for goods and services, so they're more likely to pass the higher cost to the consumer. So PPI is thought to be a leading indicator of consumer inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And Friday at 2:55 p.m. US Michigan Consumer Sentiment. That index rates the relative level of current and future economic conditions. So there are two versions of this data released. The preliminary data tends to have a greater impact, and the reading is compiled from a survey of around 500 consumers, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Okay? So that is all the key news that we need to be looking out for really in the week ahead. And to request information on our gold, silver and commodity courses and live trading programs, please go to www.jointhegoldensilverclub.com. So that is a link you can very simply go to, or contact us at office@thegoldensilverclub.com, or telephone us at 0207 193 0403. That's 0207 193 0403. And for our Asia Pacific office, you can contact us at 852 8191 0403. Very simply, we get this question quite a lot. So on our website, if you need to actually find out on our website how you actually click on the Learn to Trade area to find out more about our live trading rooms and the Gold and Silver Club programs, you very simply go to our website, www.thegoldensilverclub.com, and click on Learn to Trade. And from there, you just need to fill out that form, and we will send you some additional information. And of course, you can subscribe to our newsletter at www.thegoldensilverclub.com, or to receive free weekly gold, silver and oil and commodity currency news, live market analysis and prices. Okay, excellent. We have actually run out of time, so if there are any other questions there, I can see a couple of last-minute questions have come through. Do send those through to us, guys, to our email, office@thegoldandsilverclub.com. We will come back to you very shortly on those. And, of course, we will catch you here at the same time next week at 11 o'clock. Good luck to all of you for today's non-farm payroll. And, yeah, have a great day's trading. And, of course, yes, we will see you next week. Okay, see you later, guys. Take care. Bye-bye.